Our next guest is among that 3%, sees a harder than expected landing in the cards, bullish on some select opportunities across tech, staples, healthcare, and industrials. Joining us this morning, TD Cowen President Jeff Solomon. Great to see you, Jeffrey. I'm not clear whether you're looking for a hike in December or maybe early next year.
Yeah, so listen, I don't think it's going to happen, but I think they should do it. I think that's actually what I've been saying. And when I was on last time, we talked about the Fed being higher for longer. And I think the Fed is on a singular mission to eradicate, inflation. And so the best way to do that is take one more hike, do it at a time when you can do it. I think the later in the year it gets next year, the more difficult it's going to be for the Fed to do that because it's an election year. Generally speaking, the Fed likes to have itself set before election years occur. So if it were me, and I were Jerome Powell, I would do one more just for good measure and ensure that some of the early trends we're seeing of cooling inflation continue to make progress over the next year.
It would be symbolic in your view, yeah?
Yeah, I don't know that it's critical, but I think the Fed keeps looking at the 70s and recognizes that there was a period of time in which the Fed in the 70s took its foot off the gas and inflation came roaring back at the end of the 70s, and then we had to go through the Paul Volcker rules years. And so I think, that actually is definitely on the mind of Fed officials. That you can see it in some of the comments that they've made over the past month or so, including Chair Powell's comments, which he made, which was really to try to talk inflation down.
I don't know, Jeff. Aren't things slowing on their own now after 525 basis points of hikes in like a year and a half? Isn't that already happening?
They are, and I want to see some more things continue to go and to validate that trend. Certainly, we'll be looking at holiday and consumer spending, but there's things like travel, which have continued to be continue to grow meaningfully. I think if you take a look at housing, continues to grow. So there's still some work to do. And I ultimately, at the end of the day, this is going to be about unemployment. And so you're going to need to see unemployment tick up before the Fed can probably, have sort of sound the all clear, if you will, on inflation.
What about the capital markets? If you're looking at that as a guide to how much the Fed hikes are weighing on overall markets and activity, what are you seeing right now?
Yeah, well, I mean, listen, it tells you that the Fed activity has actually had a real chilling effect on capital markets, at least in the equity capital markets. And we haven't seen much in the way of IPOs this year. Look, the equity rally has been very narrow. I guess we call them the Magman stocks now, which is, if you take a look at those stocks, it really has driven most of the returns. Now, it's great to have the NASDAQ up 36% or so for the year, but it hasn't really translated for the vast majority of stocks. Certainly the mid-cap stocks, the small-cap stocks, and generally speaking, that's where IPOs are coming from. So I'd like to see it broaden out a little bit. I think when the Fed does ultimately declare that it's really, having the pivot, there'll be a bunch of companies to try to access the markets at that point.
The idea that Nvidia's earnings tonight are important to the market is not novel, but you actually say it does actually have it will be a fundamental comment on the build out of that business following their guidance earlier in the summer.
Yeah, I mean, listen, it's a bellwether stock, right? And we've had bellwether stocks before, and Nvidia is kind of the public zeitgeist, and for good reason. I mean, it's done an amazing job, and I think about the transformation that's occurring in our economy, and this is the most exciting thing we've seen maybe since 2008 with the advent of the iPhone. And so you have there's some very real reasons why Nvidia is a stock we should be watching, because it's a knock-on effect for everything that's happening in terms of investment in AI. And it's just on a near-term basis, the trend is your friend, and things will continue to rally. But let me be really clear. Those are mostly passive flows. I do think we could see some year-end selling in other areas where people have losses. And so if you had a balanced portfolio and you've got some big gains in some of these names, you're likely to see a real bifurcation in the market, between now and the end of the year as people sell do their tax loss selling and things that haven't done so well.